Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in corporate filings. Today we're diving into TriSalus Life Sciences' latest annual report. Get ready for a wild ride because it seems like they're juggling finances while trying to revolutionize cancer treatment. Let's see if they pull it off or if it's all just smoke and mirrors. First things first, TriSalus is in the business of trying to beat cancer. They're developing ways to deliver drugs directly to tumors and are also working on a new kind of immunotherapy. It's a tough market, but they're aiming high. But first, let's take a look at the money situation to Chem. The company's year-end balance sheet highlights they had about $8.5 million in cash and total assets, around $24 million. That's not a huge pile of cash for a company trying to make waves in biotech. Let's quickly jump to the revenue. For 2024, TriSalus brought in $29.4 million in revenue, almost $11 million increase from the previous year. Looks like their core product TriNav is gaining traction. They made this money using a combination of procedures that help treat primarily liver cancer. Now, what about costs? DSM research and development took a big chunk, almost $18 million. The investment seems to be paying off. Sales and marketing comes in next at about $26 million. This shows they are serious about expanding their current marketing push. The other line that stands out is interest expense. They went from a tiny expense to around $3 million for the year. This seems to be due to the additional funding from the OrbiMed loan in the second quarter. That added debt is going to put some pressure on them. The big picture, after all the revenue and expenses, TriSalus ended up with a loss of around $33 million, which is a little better than the $63 million loss from the prior year. So they are making some progress, but not yet at profitability. Now here's the part where reality hits. The report also mentions they may run out of money within a year. They need to find new funding or cut back on their plans. No wonder those numbers paint a story of potential difficulties. Digging deeper, their revenue primarily comes from TriNav, which means if something slows down with this single device, they are in trouble. And here's another twist. They have to make potentially big payments to Dynavax before they even get approval for their drug Melatolamod. It's like paying for a lottery ticket before you know you've won. The other major thing that could affect the stock is changes in coverage from insurance companies. They have to get the insurance companies on board, or it's going to make it really hard for them to make sales. Finally, the company acknowledges that it has limited experience operating as a United States public company, which raises questions about how well they navigate public markets. TriSalus, like many companies today, faces the risk of cybersecurity attacks. These attacks could disrupt their operations, damage their reputation, and expose sensitive data. While they've put measures in place, the threat is constantly evolving, so staying ahead is a continuous challenge. Now, let's talk about who's steering the ship. Kent cybersecurity risks are overseen by the audit committee. The board gets regular updates on cyber threats and strategies, and as of the date of the report, there haven't been any cybersecurity threats that have had a material effect on the company's operations. And like most companies, part of the real story is in the fine print, portions of the proxy statement. A doc with all the details about who's running the company are incorporated by reference, so it's worth checking that out once it's released. Now, putting on my Warren Buffett hat for a second, let's tie this all together. TriSalus is at an interesting crossroads. They've got a product with growing sales, a promising drug candidate, and a clear vision, but they also have a significant amount of risks that they may need additional funding. And the burden of existing debt, and they are targeting a very complex area to treat. And the need for funding is definitely concerning, but the thing is sometimes the greatest risk can also bring the greatest reward. So what do you guys think? Is TriSalus a game changer or a gamble? Let me know in the comments below. Thanks for watching Corporate Decoder, and as always, remember to like, subscribe, and hit that notification bell for more deep dives into the world of corporate finance.